All right, stock market technical analysis. Let's jump right in. If you're interested in the private member group, link in the description below. Okay, triple Qs. We've got, I'll just go through kind of the bigger picture things, and it won't be too long of a video. The bearish rising wedge that we've been building for quite a while was broken. All right, we took that out yesterday. As far as I can tell, you can see we had a daily close yesterday. Now today, we gapped lower today, but then the buyers stepped in. We were really oversold, so it makes sense to see some buyers step in. As of right now, and I'll just kind of talk about kind of where we're at now and how we're looking to close the week and what we have going on. So as of right now, we've recovered the trend line on the daily. You can see it's right there. But again, we still have about an hour left to go. So we'll see where we close the day. I suspect, and this is just, micro analysis. Let me drop down to the hourly, but I suspect they're going to close right on the trend line. Okay, so they're going to keep everyone guessing into the next week whether this is a breakdown and a back test or a false breakdown. Okay, and that's where they're going to leave it. And everyone that keeps the bulls long. If this is a breakdown and a back test and you're going to dump it next week, then you don't want the bulls to get out, essentially. So closing the week with a nice relief rally kind of keeps all the dip buyers and bulls happy. They stay in the trade, and then they can dump it next week. So as of right now, again, we have recovered the wedge. We'll see where we close. If I look at the weekly chart, going over to the weekly, we have a potential. They're trying to recover it, but it's still there as of right now. But this is a weekly chart. This is a bearish engulfing candle, so an outside day. And as long as you're basically encompassing the previous week, the body of the previous week, then you have a bearish engulfing. That's a topping stick or a potential reversal stick. The way you trade it is when you see it, you treat it as a top. You just mark out the top and say, okay, as long as we hold that top and don't start closing above there on the weekly chart, then it's a top. Now, again, if they rally it up and they basically close it right here at the, right there at that level from the previous week, 525.80, then it's not going to be a bearish engulfing and it's not going to signal a topping candle. So that's that's kind of what to watch for on the weekly chart. Where do we close? Does it give us a bearish engulfing? We'll wait and see on that one. And then, on the daily, again, the way this looks, I think they're going to close it right on the trend line, but we'll see. The big thing, though, that's really guiding me is the 10-year interest rates. These are still elevated. They're not backing off. So when I look at the TNX, this is your 10-year treasury. You've got resistance, 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 and you have a breakout right there. See, that's a breakout. That has not failed. That is a breakout still on the interest rates. So as long as the interest rates are staying elevated, I do expect stocks will continue to fall. And so that's what I'm leaning towards. We had a breakdown. We did have a technical breakdown, and today's just a back test. All right, that's the way I'm leaning. So what you'd want to see to confirm that is if interest rates continue to go higher, stocks should start to sell off. So something to watch there on the interest rates. Nvidia, again, being kind of the leader here, the trend's broken. All right, this has also not been recovered. Your upward trend, there it is. All right, and that is broken. Now, this can trade sideways, and maybe they can recover it. But as of right now, we're not in an uptrend in Nvidia anymore. All right, we're in a near-term sideways to downtrend. Okay. And then there's this, I've got this kind of blue line marking a potential downtrend, so maybe they can kind of rally this up to the downtrend. But in general, rallies should get sold into. All right, this is kind of done going up until the trend line's recovered. Okay, now that can happen, but that hasn't happened now. So probability says we go sideways to down, and that's the way I'm leaning. I think we're heading down to the 200 down here at 117.30. probably next week, maybe the second half of next week. And really, that's really it for today. I mean, those are the key things to really watch. NVIDIA, interest rates, and that triple Qs chart are really all that's really important. I mean, we're seeing a broad-based rally across all the sectors today. It's kind of just a relief rally after that big, huge sell-off. That sell-off was a massive one. I mean, you go back and look at on 2 days ago on Wednesday, the big red candle. You go back and look and see the last time we had a red candle that big, I think you have to probably go back to COVID to see a candle that big. So massive sell-off. Usually when you get such a large sell-off, yeah, you're going to get a relief rally. I don't think the trend has changed. I mean, I see a breakdown here, and I see a back test. We're above it now. So, yeah, there could be a potential, I can't say definitively that this is a breakdown, all right? That's one thing you have to understand. Technically, it looks like a breakdown, and they've recovered it. We'll see how we close the day. But the key indicator right now is those interest rates, all right? 1, interest rates are elevated. They don't seem to be coming down. 2, the divergences that have been building on this for quite a while, the negative divergences have been building, and we continue to see those. So we have a large negative divergence on the triple Qs. And then 3, when you look at the bearish pattern, we have a bearish rising wedge. All right, and that bearish rising wedge was broken. All right, that was a technical sell signal yesterday when we broke. So yeah, I think they're running some shorts out today with the recovery, but we'll see. Now, if they do recover the trend line, then they're probably going to run it back up to the top of the wedge. All right, I would say that's a likely area to run it back to the top of the wedge and then sell it down. But again, this wedge is pretty mature. It's definitely it's moving time basically. It's time for this pattern to play out. These typically resolve to the downside. We take the widest part of the wedge, which gives us our measured target. And take that at the point of the breakdown. And the breakdown occurred yesterday. We got a confirmed break of that wedge yesterday. And so you take it at the point of the breakdown, and that will give you your measured target. Again, that sets us up for a push down to 463-ish and the 200-day moving average right in there somewhere. I'd probably just go with the 200 since it's, not too far above. So that's the measured target. That's where I think we're heading. Until proven otherwise, we'll just play it like that. So I'll get the video out. Everyone have a great weekend, and I will see you on Monday.